Technical Analysis of the Financial Markets by John J. Murphy is a comprehensive guide to understanding and implementing technical analysis in trading. Here are 12 key lessons that summarize its core content. 1. Introduction to Technical Analysis. Definition and overview. Understand what technical analysis is and how it differs from fundamental analysis. Key assumptions. Learn the 3 basic assumptions. Market action discounts everything. Prices move in trends, and history repeats itself. 2. The basics of charting. Types of charts. Learn the different types of charts and their uses. Chart patterns. Understand basic chart patterns like head and shoulders, double tops and bottoms, and triangles. 3. Trends and trend lines. Defining trends. Learn how to identify upward, downward, and sideways trends. Drawing trend lines. Master the technique of drawing trend lines to determine support and resistance levels. 4. Moving averages. Simple moving averages. Understand how to calculate and interpret SMAs. Exponential moving averages. Learn the differences and advantages of EMAs over SMAs. 5. Indicators and oscillators. Relative Strength Index. Learn how to use RSI to measure the speed and change of price movements. Moving average convergence divergence. Understand how to use MACD for trend following and momentum. 6. Volume and open interest. Volume analysis. Understand the importance of volume in confirming trends. Open interest. Learn how open interest can provide clues about the strength of a price movement. 7. Point and figure charting. Basics of point and figure charts. Understand the construction and interpretation of point and figure charts. Pattern analysis. Learn how to identify buy and sell signals using point and figure charts. 8. Candlestick charting. Introduction to candlesticks. Learn the basics of candlestick charting and the significance of different candlestick formations. Common patterns. Identify key patterns like doji, hammer, and engulfing patterns and understand their implications. 9. Dow theory. Principles of Dow theory. Understand the foundation of modern technical analysis through Dow theory. Market phases. Learn about primary, secondary, and minor trends according to Dow theory. 10. Elliott wave theory. Wave patterns. Understand the basic structure of Elliott wave theory and its application in predicting market movements. Fibonacci relationships. Learn the significance of Fibonacci retracements and extensions in wave analysis. 11. Time cycles. Cycle analysis. Understand the concept of time cycles and their role in forecasting market movements. Common cycles. Learn about different cycles, such as Kondratiev, seasonal, and the 4-year presidential cycle. 12. Putting it all together. Developing a trading plan. Integrate the various technical analysis tools to create a cohesive trading strategy. Risk management. Learn the importance of risk management and position sizing in successful trading. Each lesson can be studied in detail with examples and practical exercises to reinforce the concepts. By following these steps, you can build a solid foundation in technical analysis and apply it effectively in the financial markets.